trading against the DR, you will have a lower probability than getting millionaire in a casino. Mark this word. Opening gap here from the closing to the opening. So you see we are going back to the gap. We are closing it and we are in the ADR session. Let's see. So ADR is finished. We are confirming literally with the second candle. So we are looking for long entry now. Look how the ADR DR high aligns with the DR low from the previous RDR session. So previous RDR session is over here, and look at the DR and how the levels align together. So we are looking for a long entry right now. Let's see if we will get one. We could take a long over here if we come back over here. So far nothing here, nice volume imbalance, not closed yet. We're still not coming down to this level. Nothing for me to trade yet. There's just nothing for me to enter here. I mean, if I want to enter, I want to enter at significant levels. I don't want to just enter here. What time is it? 1:20, almost done with the ADR. So no entries for us. 2 o'clock now. So now we are at the ODR session. So the ODR is returning into this one. Very small sessions and is happening inside now of the RDR session. So two potentials right now. So if it stays like that and we extend to the upside, we have a potential for an upside expansion model. If we stay in this range and we will expand to the downside, it's going to be a range expansion model. It's not very clear right now from the price action. So let's see how it will turn out. So now we have an early confirmation with the close about the IDR. So I think for now, I would expect price, like technically, I would like to see an expansion to the upside. Let's see if it's happening. So now we have confirmation to the long, nothing to enter yet for us. So when you look down here, that's like what I said. The only reason to enter down here would be potentially this volume imbalance, but even this one is not taken by price. I mean, it's touching here, but you have to be very confident to take a trade over there. It would be nicer, like if this volume imbalance would be around this mid area, like this, for example, and price comes down here, then this could be a potential long entry even before the ODR is finished. But how it played right out here, it would be just literally the volume imbalance which is supporting this long trade. Your only idea would be simply that you speculate on a upside expansion model, but that would be like a risky trade for me. It's still a valid trade, but like for me too risky, to be honest. Would have played out. We are looking now for a long entry, and here is another a double volume imbalance now. Let's see if price comes back. We see rejections now from the downside. We are pushing right into this one. So that would be like your first chance, or like my first thought would be entering here. We have another volume imbalance over here. So I guess I will take a long trade here. Stop 2 ticks below this volume imbalance. Target new high. And stopped out. That was quick. So now we have another volume imbalance over here. Now I want to see, at least I already lost 1 R in this session, so I want to see at least another rejection from the mid before I would take a trade. So no rejection, we are filling the volume imbalance but rejecting from it. We are coming now into the area of retirement setup. This rejection is too strong right now for me, so I want to see another candle. Okay, now I have to take the retirement setup, doesn't help. Entry here with the close. 1, 2 ticks below, target at least the other side of the DR. No, we are still in the trade. So 2 times rejection from the DR, we are wicking through it. We also have the volume imbalance, which is getting filled now. So aligning with the DR, that's areas I really like. So there is a high potential that we will go up now. It's the volume imbalance together with the DR levels. We are wicking, we are closing. And now we are still not closing below the IDR level, so that looks good in my eyes. Let's see. Price reaches 0.5. 0.5 again. We are closing above the mid levels now. 3.5 R and plus, so we put the stop on entry. There's another volume imbalance, so it could be that we get stopped out when we are wicking, but like I'm not allowing myself to trades which are like 3 or 4 or 1 R and plus. I don't allow them to go into minus anymore, so I have to put my stop on entry. So stop on entry now. So we are closing the volume imbalance. That's good. Again, getting rejected, so it all looks good so far. Again, volume imbalance. Again, now we are not even closing anymore. We are going above. That looks good, but we are still below the 0.5. So now it would be nice if we would extend a little bit to the upside. And there we're getting stopped out. So a quick wick. I was aware about this risk, but it doesn't help. What time is it? 6:25. So I guess we have to take another entry now. Still retirement setup. So we'll try it again. Same stop, 1, 2 below. So that's what I mean. At the end of the day, I moved my stop and I have to re-risk another R now. If you leave your stop like it is, you would have been not stopped out right now. For me, that's just the rules I follow. I don't allow trades to go into minus, even though I'm aware that I'm getting stopped out and I'm most likely gonna re-enter because it's still a retirement setup. So let's see. And stopped out. So now I think that must be 2R this session, so minus 2R I think. So that means done for the session, no more trades. As choosy as they might look, I'm gonna skip. Okay, we are breaking now, so it's a false ODR session. Most likely we're gonna reject here. Anyway, I can't trade. Just for information, like you normally when you have 2 days, when you have a day where we see both sides, one of them is gonna be fake. I would suspect that the long was the fake out, but it could be also the other side around, so you don't know. If you're looking at price, I'm most likely to expect price to go lower. Actually, how it's looking for me right now, it seems to me more that the upside from the ODR was a fake. That's how it's looking right now. There is 2 reaction to these levels again. So if I would have not lost 2R already, I might consider a long over here. So let's wait for the RDR session to start. So RDR is forming. It's going lower as we expected. Also like the relationship between the models. So this looked like a range expansion, like an upside expansion model. As I speculated and I took the trades over here, it was not working out. So also this one doesn't have a 100% hit rate, right? But it's FOMC day, so you shouldn't trade anyway. So RDR session is over, so there is no confirmation, not an early indication. So as it's FOMC, we are skipping to 10 o'clock. So we see a confirmation to the downside. Market rallies up. Another half an hour before the news or the rate decision comes in. So now we will see rate decision. As we see, we have a confirmation here, would be retirement setup, but it's FOMC, so I'm not trading it. Whoops, there is the decision, so we extend up here, 2.5 rejections over here, but we are not trading it. As we know, FOMC is a 2 phases event. We have once the decision, and half an hour later we have the press conference with Powell. So we're not taking any trades here. We go up here. We are rejecting from this level, which is also this levels over here. A short would have been an option if it would be a normal day. Let's see how it continues. Coming down, coming down, coming more down. So no trades. It's not worth to trade inside of this for me. So we have confirmation to the downside, confirmation to the upside, and again confirmation to the downside. So if I want to trade, I would look for a short entry if I want to trade. And I'm not taking a trade here because, to be fair with you guys, I know where the market will go because FOMC, I know the patterns. So I'm not taking a trade here. I know that the market will plunge from here on. Here, this could have been the reason. So confirmation first, then we have the fake. We clear out all the liquidity to the top side. We are rejecting from this level. So here you see clearly the rejections from these levels. Market comes down, touches down to the low IDR, comes back again, gets rejected again, and we are getting another confirmation. So this could have been a point where you could enter into a short trade. So we'll just let it play out. Market is closed. That's it. So let's see for the ADR session now. So there is a nice volume imbalance over here. So ADR is closing, no confirmation, no early indication. So now we're getting the confirmation for long, potential long entries. Target could be here. Let's see if we will get an entry. Volume imbalance over here. Not getting any entries yet. You see, like we are filling this and now it's using the volume imbalance and rejecting from over here. Still no entry for us. So I'm skipping forward, nothing interesting. Market comes down. ADR session is over. So based on what we have seen, and it was FOMC, I need some more, like this is not enough for me to take a trade before I see the ODR session. Right now, my question would be, will we continue to go lower or will we go up? And right now I can't tell that. So I'm going to wait for the ODR and want to see what the ODR is telling me. So we are rejecting nicely from down here. Looking quite good for a long, potentially going maybe up here or something like that. So we don't have any confirmation here. We get an early indication for long. Let's see if we will get a rejection, but like I don't think I want to trade it right now. So no rejection from the midpoint. Now we have a rejection, but we already go below the DR levels. Let's see, maybe next candle, maybe it's worth to take a long. So now we're getting confirmation to the downside. So we're looking for shorts now. We have a volume imbalance over here. Well, let's see if we will get an entry now. So we are returning, we are closing the volume imbalance. There is a little rejection, but that's still not enough for me. Here you see we have another volume imbalance. Let's see how the next candle looks like. Another rejection, don't like it. We're making a new low. We are still battling here right now with the ADR lows. So we can't take a long trade, so I'm not going to take a long trade here, obviously. And for short, it's still not enough for me. So we are bouncing away from here. So what could be potential entries? So we have the minus 4.5 standard deviation and we have the midlines here. So this area could be interesting. Let's see if we will get it. We close above the IDR and the DR low. Well, that's good for me. So gonna take a short trade here. Stop 2 ticks above the mid IDR. Target would be a new low over here. No, that's too far for me. So target over here. You could go for the next one if you really expect market to go lower. Let's look at the bigger picture. So that would be the new low. That's fine. There's also 2.5 standard deviation over here. Let's leave it there. But potentially you could even target maybe the next standard deviation level. The new low and the 2.5. That's an interesting area. So that would be enough for me. Directly, nice rejection over here. Now we are coming back again. Another nice rejection from the standard deviation levels now. And we are getting filled. And 2.5 plus R. That was a nice trade. We are closing now below these two levels from the ADR. So all looks like we will see more short potential actually. So let's continue. It's 5:50, so enough time. We have taken this out and we are rejecting from over here. So we are not able to close about the DR, IDR levels. Also here, ADR, I just mark it out for you that you see it. And how random it is that the low of the ODR is exactly the same like the high DR of the ADR. So I'm gonna take another short here. Gonna enter right here at the close of the candle. Stop 2 ticks above the DR, low of the ODR. Target now would be the next standard deviation, or if you like, you can make the target with the new low. For me, I will just go now with the next standard deviation. Nice rejection from this level. I mean, this is all confirming what you think. So we have the close, we take this back. We are overall in a short movement if you look again at the bigger picture. So let's see if we will go lower. If we would have our price target over here, we would be filled. We are not getting filled yet. And here is the fill. So another nice trade in the ODR session, 5R. So that was another nice trade. It looks to me, it looks really like we would go lower. There is a volume imbalance over here. Maybe we'll go back here, but like price seems to be very heavy to the downside. So the algo wants to go lower. I don't even know if we will come back up here. Should we come back up here, I'm most likely gonna take another short trade. And look at the reactions here. So like look how the standard deviation levels matter to the price. Yeah. So you don't have to believe me what I'm saying. Just look at price. Like look at the reactions here from these levels. Look at the standard deviations and how precise it is. This is most of the time by tick or maybe -1 tick. But it's so precise that it can't be random. Look at the rejections here from this level, and then now we break down and now it becomes like almost like a barrier for price. Just look at this. -6 standard deviation and direct extension to -6.5. So now ODR is done. So we are waiting for the RDR session now. So RDR is starting right now. And again, look at these levels. They are still important. That's like really, really interesting. So RDR session starts as expected. What can we say about the model so far? So we go above, we go below, so we'll expect a choppy day. So if you see this model, small ADR going up, the box goes up, but price extends to the downside. So just based on what I see right now, you can expect like a choppy day, like this, and then down again. So this will be not a one-sided movement. I mean, I can be wrong. Maybe we'll just go lower, but I don't see that. If we really want to go lower, we would have the ODR already going below these levels and not fighting here so long before we extend to the downside. But let's see. RDR so far down, and now we're going up and it's close. So we don't have confirmation yet. Let's see. So now we have a confirmation to the upside. So that means we are looking for a long trade. We are coming close to these levels here. Let's see the next candle, but I guess I would like to long very quickly. I want to see the next candle, not that it's just a fake and we go down. Let's see the next candle. Next candle is going up. So let's see. Rejecting from the IDR levels. We are coming back to the opening price, and now I'm gonna take a long trade. 2 ticks below the midpoint. Target would be a new high, and potentially you could let's make 0.5. Why I was thinking about putting a new high. So sometimes I'm even quicker than I can explain it to you. Look at these levels. If price is not strong enough, like this is a very strong area here. The low hanging fruit in this case would be definitely the new low, because to reach the 0.5 standard deviation, we have to break through this. We are like in a strong downtrend. This area will be a difficult area for price to take. So that's why, and actually the more I'm looking at it, I want to take profit. But that would be the conclusion, the logic thought. To reach 0.5, it has to go this one. We are coming from FOMC. Look at this price coming down. So it's better to take the low hanging fruit here instead of speculating for the 0.5 standard deviation, because just price and price action seems to be very, very to the downside. So it also means that's the point, if I would not have the RDR or the DR concept at all, so my guts would tell me but I'm not listening to my guts when it comes to trading. But my guts would tell me to look for short trades. That's just what it is. Most of the people who don't know the DR model or believing in something else, they most likely would look to short right now somewhere, which is okay. For me, DR is telling me, okay, I'm just looking for long trades. It's just for this session. It doesn't mean that price can go down lower. That's always a possibility. But I know that the probability is below 15% that we will go lower. And that's what I'm following. That's like the heart and the soul of my trading. Even though looking just at price action, I would expect price to go lower. But DR is telling me, no, you're looking for long trades right now. So if I would be very, very short focused from my buyers, from what I see, I would just not take any trade. But I have learned over so many years that trading against the DR, it's just the biggest mistake you can do. Like if you're aware, if you don't know DR, it doesn't matter. Just statistic wise, trading against the DR, you're gonna lose money. It's like you have a higher probability to go into the casino and get a millionaire in the casino than your probability is when you trade against the DR. If you're trading against the DR, you will have a lower probability than getting millionaire in a casino. Mark these words. Trading against the DR has a lower probability than winning millions in the casino. And that's why I follow it. So again, logical thought, why I want to take the target over here, because this area is very important in my eyes. Price will be having a difficult time to go through. Nice rejections from the open price again. Price goes up, closes above the DR, that's a positive sign. Closing below, immediately retake, bigger body candle than the candle before, that's a positive sign. So now I don't want to have price coming below this level anymore, that's why I'm putting my stop on entry. So if we get stopped out, we are not losing anything anymore. And we are reaching the profit target. That's it. And as you can see, price is already reacting to what I said. So far we are not able to close above. Let's see if we would have hit it. And again, rejection from over here. Just look at it. I mean, you must be blind if you can't see that reaction. I don't know. It's like looking at it and I'm just realizing how amazing it is. So no clear rejection, so no need to re-enter again. And this rejection, like based on my overall bias, here is also like a volume imbalance, a small one. It's just like by magic, all of these areas are lining up. And you have to ask yourself, if you don't believe me what I'm teaching, how is this possible? So if you don't believe me, if you don't believe in DR and you think it's whatever, like at one point you have to look objectively at things. And how is it possible that everything aligns up in this area? Like literally everything. If you look at this, you have to come to the conclusion at one point that it's not by mistake or random. Something, what I'm teaching you about the DR levels and the DR as it is, seems to be really impacting price every day, every minute, every time you're looking at it. You don't have to like me. You have to see this at one point. And the more you will look into your charts and the more you will look at price action, you just figure out that it's just the simple nature of the algo visualized with my DR concept. So anyway, no real rejection over here. There is a little DR, IDR rejection, but I don't like it, especially with what I said over here. So I'm not taking a trade. 3 o'clock. I still don't want to trade it. If I don't trade it, it doesn't mean that you can't trade it. It's just like I don't like it, and the reason which is taking me which is making me not taking any trade is this area up here. So if this area would be not existing, I would take this rejection over here. We're coming back, we're closing above, we are rejecting clearly from here. Either I would take a trade here, or I would take this one to the long. But like this area is stopping me to take any long right now. So we're coming down to the level and the session is over.